So go ahead, we are live.
Okay, thank you. Charan sir, go ahead.
Good morning, everybody, and I would like to welcome everybody on a Saturday morning, a beautiful day in Delhi today, bright and sun, and the weather is very good. I would like to welcome all of you to this beautiful webinar, very timely webinar, and extremely important webinar that SOCM is organizing in its 100th year. And as you know, the whole country, actually the whole world, is under this COVID-19, which is posing a very big challenge to the world on various aspects, sociologically, psychologically, and most importantly for us, from angle of trade, commerce, and economics. So here we are in the middle of COVID-19, and we are facing a challenge. And in our own country, which is going to be the fastest growing country on the planet in 2020, we are also having challenges. There's been a lockdown which started in the end of March and will probably be ending by June end in most of the places, and some places loosening from June 8. During this period, the government has been initiating lots of efforts to do two things. First is the government wants to revive confidence in the economy and revive the economy. And therefore, what the government has been doing is, on one hand, telling the banks and the financial institutions to finance growth despite the challenges. And on the other hand, the government has been announcing various measures at different points for different sectors of the economy and trying to help them grow, trying to inspire confidence and trying to revive the sagging growth that we have in our country. In this context, I must congratulate SOCM for having thought of having this beautiful webinar that we are in, and we are going to be talking about the priority sector lending. Now, priority sector lending has various connotations. Also, priority sector lending has very interesting history, starting from 1969, when we were still developing and we had just nationalized some banks. There is some social responsibility that the government had. So by 1974, we had already put in something under the name of priority sector lending. Now, as you know, the economy keeps evolving. As the economy evolves, the sectors which come under priority sector lending obviously would also be evolving. So as of today, agriculture, MSMEs, exports, they all enjoy the priority sector lending status, which is important. In a country which has about 30% people below the poverty line, has total labor force of 50 crore, 10 crore of it is migrant labor, and as you know, there are 6 crore MSMEs which employ 12 crore people and which contribute 30% of the GDP and nearly 40% of exports. You can imagine how important this sector is. This sector has also suffered tremendously under COVID, and the government has come out with special packages for this sector. As far as agriculture is concerned, as we all know, agriculture employs nearly 55% of our youth, and the employment is very large in agriculture. Agriculture contributes substantially to the national income to the extent of agriculture allied activities accounting for nearly 18 to 19%. Fortunately, COVID-19 came at a time when we had the bumper Rabi harvest, and we are anticipating that agriculture will be able to go through the COVID without much dent, and so we'll have good seeds and good monsoon, and therefore expecting a good harvest under Kharif also. But there's lots of things, because agriculture employs so many people and the economy moves and revolves around agriculture. The government has also been announcing many things for the farmers to double their income. You would have just imagined how the government announced a 500 crore package for the bees. So therefore, we thought it's a great idea, and exports we all know and are going to be a challenge. we are going to be growing at 2 to 3%. The IMF says 2%. My own estimates are 3% despite all the challenges. But please remember, the world could be negative growth. The global world average is -3, and most of the advanced countries could be -7, even -10. Our exports are going to suffer there. So how are we going to handle this? The priority sector lending has a history, as you know, of nearly 50 years. And now this challenge of COVID has come, and priority sector lending could be one area which would make the banks, who are very familiar with priority sector lending, would make the banks lend and revive the economy. Keeping this in mind, we have put a panel together and must thank SHM for making all the efforts. We have a renowned agriculture economist, and I'm not going to go into the biographies of each of the panelists today. They're all well known. We have Dr. Dadich, who's been agriculture economist, and he'll be speaking to us. Not right now connected to us, some challenge in Bombay. So there's the internet challenge. So we'll be able to do it and make him join soon. Then we have Mr. Sanjay Srivastava, who's from SIDBI, and he's going to be speaking to us. And we have Mr. Lakshmi Narayan, who's from we have Sanjay Srivastava from SBI, and we have Lakshmi Narayan from SIDBI, and then we have Mr. Syed, who's from the Muthoot FinCorp, and then we have Mr. Anil Goel, who's from AAA Insolvency. So what I'm going to do is, the fact that we have not been able to connect to Dr. Dadich right now, we'll bring him later in the panel. I'm going to start with Mr. Sanjay Srivastava, the person from the State Bank of India, who has the largest presence. The bank, has the largest presence in the country. And after the merger that took place, they are the largest bank in our country. They have reach everywhere. I'm then going to, after Mr. Srivastava, I'm going to go to Siddhi and talk to Lakshmi Narayanji, and then we will go to Mr. Syed, and we'll close our panel presentations with Mr. Anil Goel. In the meantime, I'm sure Dr. Dadich will join and we'll have him there. The way I'm planning this is, each of the speakers, the panelists, will have 5 to 6 minutes to speak, and then we have a little interaction amongst the panelists, which will be beneficial for the audience. And then we will open up to the audience for asking questions. There's a chat box on the right, as I can see it, and you're welcome to put in your questions there. And we will look at those questions and probably respond back if we have time. So with this little introduction, and once again thanking SHM for organizing it on a Saturday morning, I would now like to invite our colleague from State Bank of India, Mr. Sanjay Srivastava, to give his opening observations.
Thank you, Dr. Charan Singh. And thank you for the introduction of State Bank of India. Thank you, SOCHAM, for organizing this webinar. Hi to Mr. Anil Goyal, Mr. Lakshmi Narayan, Mr. Saeed, and the audience who are connected. So as we all know, we are in extraordinary circumstances. So, and as Indians, we have always been doing, we turn challenges into opportunities. We find our ways out. So we in the bank, we are also learning new things. Like one which everyone would have felt, all my branches across the length and breadth of the country we have managed to make them working every day. So every single day, be it the direct transfer by the government, the basic banking requirement of the customers we have been trying to cater to, and that has gone. So I can proudly say my branches have not closed shop even for a single day. In offices, what we are learning to work from home. 50% of our people are working from office, 50% of us we are working from home. So the new norm is using Teams, using WebEx, using webinars, and many other softwares that we use internally. So all our paperwork has reduced. So we are working digitally. All our approvals, all our sanctions, they are happening digitally. So that is one thing which I take as a positive from this environment. We always wanted to go digital. So the time which we would have taken to go digital, that has at least shrunk by 50%. We have done it very fast. Now coming to the situation where we are today, See, if I put it in short, we already saw demand shrinking before COVID started. The demands were going down, be it the auto sector, be it the other sectors. They were all looking southwards, and then we have this pandemic halting the country, sort of say, for a brief while. The supply chains have been affected, yes, to some extent they have been affected, be it agriculture, be it SME, and many sectors. I mean, I would go structurally through the points which we have done for the thought for this webinar. So if we talk of liquidity and if we talk of leverage, so see, a rough estimate would peg around 11.84 lakh crores, which is the outstanding of all banks put together. If we look at tourism, hotel and restaurants, if we add shipping, if we have transport operators, and if we have MSMEs themselves are about 4.73 lakh crores. I'm talking of the banking sector, not just SBI. Then, if I look at how do we promote sustainable things in this? Now there have been efforts from all angles. RBI has done its bit. Be it permitting a moratorium of 6 months. Now it is a 6-month moratorium on term loan installment and interest. Be it not charging interest on working capital for this 6 months. And now RBI has been, that's a very good step on the part of RBI to permit banks to create a FITL at the end of this 6 months, so that our borrowers will get another, say, 10 months time to repay it. So while RBI has been taking all these steps, government on its part, we have seen a very active finance ministry, very actively connecting with people and coming up with n number of initiatives. I mean, the biggest I would say is the 3 lakh crore guarantee scheme, where as bankers, we are giving 20% over and above the outstandings which the borrowers had as on 29th February. And if I talk about other steps which government has, so I'll start with RBI. One, the repo rates have seen a downward trend. CRR has seen a downward trend. Then TLTRO windows have been made available to bank to invest. NABARD, SIDBI and NHB, they have been given more refinance facilities. As far the exporters are concerned, the time period for realization of their proceeds have been increased by Reserve Bank of India. Imports, again, there has been relaxation. Restructuring, we have been given a big, like this shifting of term loan installment and interest, giving them moratoriums. RBI has been kind enough not to treat them as a restructuring. So all these things are there. And where do I find State Bank of India in the midst of all this? I'll be happy to share with you, even before RBI came out with its guideline on 27th of March, 15th of March, we launched a product. We called it COVID Emergency Credit Line, where we said we would be giving 10% over and above the outstandings which my borrowers had as on 29th February. Just a small bit of data for that. Around 1,28,000 borrowers use this facility for about 7,800 crores. This we started on 15th of March itself. Going forward with the government initiative and the directions, this government GECL, as we call it, where we need to give 20% over and above the outstanding on the 29th February, there around 63,000 of our borrowers have utilized this to the extent of around 11,000 crores. So these are a few steps which we have taken. Similarly, on the retail side, be it home loans, be it education loan, be it personal loan, this moratorium has been given across the board. But yes, if any of my borrowers feels that yes, he can repay the amount, we have provided windows to them. So okay, you can come to my. So coming to the branch is not the norm now. So you can send us emails, you can send your from your registered mail ID, and we have been giving that window to them to repay the amounts if they can. So to start with, I would say banks in general and State Bank in very particular have been on the front foot trying to help out. people and look towards their cash requirements also. So you would find in many of the centers we would have with our BCs, we have gone maybe door to door, locality to locality to take care of people's cash requirement. So we are there wherever we are required. So I would like to stop for in my opening remark at this point, and would like to hear from others, and then would be open to questions.
Thank you so much, Mr. Sanjay. Even I have questions and we'll come at the end. But in the meantime, let's move on to Mr. Narayan. And he's from SIDBI. And I would like to give you the time to present SIDBI view as well as the efforts which have been made by the government to somehow revive and give confidence to the MSME sector.
So, Mr. Narayan, your audio is mute. I think you have to unmute yourself.
Yeah, I think you will have to.
Thank you, Dr. Karan Singh, and thank you, Association, for inviting us and other panelists and members and the audience. I'll go about briefly explaining about the SIDBI, what SIDBI does, and basically what SIDBI does post-COVID. We have initiated some COVID special related schemes, manufacturing COVID products, etc. And what government has announced as part of the Atmanirbhar relief package. So SIDBI is Small Industries Development Bank of India, is a public sector financial institution mandated for promotion, financing and development of MSMEs in India. As part of our financing mandate, we do fund a lot of institutions such as banks, MFIs and NBFCs so as to reach the vast number of MSMEs all over the country. And we also do direct lending to MSMEs in a small way out of our 80-odd branches all over India. Basically, what we try to address in direct finance is to fill the existing gaps in MSME credit system and introduce innovative and demonstrative products so that later they can be adopted by the banks for reaching to wider audience. And we also do small way micro lending through partnership so as to serve the entrepreneurs at the bottom of the pyramids. And we do, I think everybody must be aware, we do a lot of fund-of-fund activity through our own funds and through the funds announced by Government of India. And wherein we contribute to the purpose of the venture capital funds to ultimately invest into the purpose of the, ultimately invest into the startups and MSMEs equity. And we do a lot of promotion and developmental activities for the MSMEs, such as promoting entrepreneurship and holistic development of entrepreneurs through a lot of credit plus activities, etc. And we coordinate the activities of all the institutions which are engaged in the MSME space. As far as this is a broad thing we do, and we have promoted a lot of other associate institutions in the process for in promotion and development of the MSMEs, such as Credit Guarantee Fund Trust, CGTMSC, which gives collateral-free loans up to 200 lakhs to MSMEs, and SIDBI Venture Capital, which invests into the, it's a venture fund which invests into the startups and MSMEs, and Receivable Exchange of India Limited, which tackles the delayed payment problems of MSMEs, which is a quite recent phenomenon, around 2 years old. And Mudra, I think everyone knows about Mudra, which basically the aim of Mudra is to fund the unfunded. And we also promoted a credit rating agency, Accurate Ratings, currently it's called, earlier it was called SMERA. And online psbloans.com is one of our recent initiatives where MSMEs need not go approach to the banks. They can apply online and get the sanction in principle, although which will be followed by a regular sanction and disbursement at the branch level. We also developed one asset reconstruction company called ISAR, which is a ARC. These are the broadly the activities done by Sydney. And post-COVID, what we have done is there is a dearth of manufacturers or availability of PPEs, that is personal protective equipment kits, or N95 and specialized masks, etc. So we launched a scheme called SAFE at around 5% interest rate, without any collateral, without any promoter's contribution. But with this has been done with the support of funding from RBI with a limited corpus, and I think this has also helped in India becoming the second largest manufacturer of PPEs in the country. And we also, RBI has allocated around 15,000 crore for on-lending to NBFCs and MFIs, which has already been underway. I think so far we have done around 5,000 crore disbursement out of this to various NBFCs and MFIs. And we also, as part of our direct lending activity, we also gave emergency loans up to 20% of, by way of a scheme called Liquid, up to 20% of their outstanding. These are the activities we have done under COVID. And when it comes to the relief package, Atmanirbhar package announced by the government of India, the 3 lakh crore collateral free loans, which is basically seed money to crank up their businesses for buying raw materials and paying wages and attendant expenses, etc. And also government of India has announced a partial credit guarantee facility of around 20,000 crore for stressed and NPA borrowers, so that fresh equity can be infused to them, so that they can become more viable again. The scheme has already been approved and it has to be rolled out. I think it is taking a little more time due to the intricacies involved. And the third one announced by as part of Atmanirbhar package is the fund of 10,000 crore. I think this may not immediately serve the purpose, but this is a long-term measure because there are hardly any AFs which are into space, MSME space, operating MSME space. But I think this will help in the long run from like AFs maybe set up for the special situation funds to tackle the stressed and NPA accounts post-COVID, whoever has been affected by COVID. I think this is a remotely possibility I see, where if they can garner private capital, such AFs can function well, and this will be of meaningful use to them. And RBI has also announced a moratorium of initially 3 months. Now it is extended till August 31st, that is around 6 months. And the most important thing is the FITL, as Mr. Srivastava has already mentioned, which is the very important measure, FITL, which gives a lot of relief to MSMEs. I think this is the broadly measures. I think we can take questions as we go along instead of discussing. That's it, Dr. Charan Singh.
Thank you very much, Mr. Lakshmi Narayan. Now let me go over to Mr. Syed. He's with Muthoot FinCorp, and also they work a lot at the grassroots level. So we would like to have your inputs, Mr. Syed. Mr. Syed, can you hear me? Hello, Mr. Syed, can you hear me?
I think you again have to unmute yourself. Maybe your mic is not
Hi.
initiated.
Yeah, I can
now
hear you
it is started. Now it is started.
Yep. First of all, thank you for inviting. Yeah, I have unmuted. Thank you. Okay. Thank you very much, Dr. Singh, and I think thank you very much for Sucham for organizing this seminar and also inviting me to speak over here. And good morning and good afternoon to everyone who's listening to us and to my colleagues. I think Dr. Singh has rightly kind of laid the conversation here. I would represent, like though we have bankers who are panelists, co-panelists here, I will represent the basically the practitioners who are in NBFC sector who are facing this crisis. As everybody has said, this is an unprecedented kind of a situation. This is one of its kind HEF event, as some of the experts have said, which has health, economic, and financial impact all together in one go. So as a practitioner, I represent Matut Papashin Group, where we have ventures in housing finance. We have largest venture in gold finance. I represent the finance. Pandemic in the kind of financial services space, especially for the NBFCs. So if you recall, the NBFC were all struggling for funds after 2018 September in some of the NBFC crisis, but it had slowly recovered and it was moving towards a positive direction and it was growing. But this unfortunate event has happened. So because of that, we are all facing the situation. But I think as some of my co-panelists has highlighted, RBI has taken very prudent and good steps in terms of channelizing liquidity and also ensuring some breathing space for the borrowers. So one of the such initiatives was offering moratorium to the borrowers. So as a responsible lender, we have extended moratorium to all of our borrowers. 100% of our borrowers were given moratorium. Good amount of borrowers have voluntarily kind of initiated the payment. So we have almost 60% of our borrowers in moratorium, but rest of them are paying us. The RBI has also taken initiative in terms of giving some sort of a relaxation in recognizing NPAs or in recognizing delinquency. There is a standstill on recognition of asset, so which is a little bit of a comfort from a perspective that during the lockdown one, which was very harsh and nobody could go out, it was very timely and I think a good strategy, but operationally nobody could go out. So obviously there was some sort of a dispensation, some sort of a requirement was there, which RBI has done very well. After that, there was a TLTRO1 operation, which was quite successful. 1 lakh crores of funds were kind of given to banks for on lending. All of them were subscribed well. There was a 50,000 crore window later on, which was announced as TLTRO2, more dedicated towards NBFC, MFIs, NBFCs, and MSME. I've been a vocal kind of advocate in terms of going out and asking RBI to do something specifically for NBFCs because NBFCs were not getting the support that they needed at that time, and liquidity is a key concern. So when the borrowers stopped paying because of moratorium, and though the bankers had offered moratorium, but not back-to-back moratorium was available. So there becomes a challenge. So RBI was prudent enough and they had the visibility in terms of coming up with the NBFC dedicated TLTRO2 operation. Even though the first tranche of 25,000 crores was not fully subscribed, but 12,850 crores were subscribed, and banks are in the process of releasing that money to various NBFC segment. It was still in the place as available to NBFCs, and the entire downward kind of lending is beginning slowly and gradually, and we are also as an organization in contact with the various lenders who are providing these facilities. I think the impact of repo rate and reduction in rates would be felt once the lending starts. So once obviously the variable rate loans which are there in terms of housing, some of the borrowers would also already being benefited by that. But further, I think it will be felt when the lending start. I think the biggest kind of concern right now is the lending process to start, and slowly, gradually, that is happening. I think it's a gradual lockdown opening, which is happening from lockdown 1 to 2 to 3 and 4. And now almost we have unlock kind of a situation. So 95% of our branches are operational. We are able to reach to our customers. We have also started disbursements. We have kind of innovated in the period of time where there was a lockdown. People were able to take loan from home. So there was an online facility where our existing borrowers can borrow. So all of that facility has been kind of initiated. There are certain good monetary measures, fiscal measures that have been announced. Some of the measures announced from Ministry of Finance, which my colleague has enunciated, were 3 lakh crores of loans for MSME. That is, I think, a very, very big initiative. If that translates into a quick disbursal to these MSME, I think we will have a good kind of attraction, and we could be able to kind of get back on the growth path quite soon. There are all sorts of prediction that the recovery would be V-shape or U-shape. I don't want to get into that, but I think the traction is getting there, and you would see that a good amount of work has started. There is an announcement of 20,000 crores of CUT SME kind of a facility for stressed asset. I think that is also a very positive initiative by the government. I think that will help a lot of little bit struggling MSMEs to get back, and the Atmanirbhar package that has been announced and the focus on local production will further enhance them and will ensure that their productivity improves and they are able to go to the market. I think apart from that, which I was quite closely involved, was the street vendor scheme that Urban Development Ministry has kind of taken over from Ministry of Finance. There is a 5,000 crores of package has been issued for street vendors. I think that will help the small shop owners to kind of get back and restart their business. So overall, I think there are enough announcements that have been made, and there is enough facility. Now, as the lockdown is opening slowly and gradually, people are restarting business, and people are kind of reaching and taking the benefits of these facilities, and bankers being in part of it are slowly dispensing these facilities. I think will help us kind of come back to the normal stage. What is a good kind of a trend that I am noticing in this is in our business. Even when the lockdown was there, obviously there was no movement and no are falling into the green zones. The collections have been improving. So I think the credit worthiness of the borrower remains intact. I think it's a matter of time when we will have a confidence to go into the field and lend. We essentially serve the bottom of the pyramid customer, and we are very close. I had the microfinance division. We have 1.8 million clients which are in deep rural locations. We have had interactions. I think most of those borrowers are waiting for credit lines to start. Obviously, the credit lines are not starting right now because there is no physical contact possible, and we are also practicing social distancing norms. It's much more of a touch and feel kind of a business in the rural areas. So it will slowly start, but I'm very optimistic and very positive with the way that the agricultural kind of economy has remained intact, and we have seen a very good crop last season. And most of the activities like milk vending, vegetable vending, kirana stores were active during the lockdown. So I think we are at a good space right now. It's only a matter of time when the recovery starts. There are certain improvements, scope of improvement in terms of how we dispense this money to the bottom of the pyramid in terms of various schemes that the government has announced. But I think these are things which will sort out itself when the government is on top of it. from the lending institutions point of view, I can say that we are just waiting for this moratorium to come to us slightly closer. There is a second moratorium that has been announced, and the lending would definitely start. A part of lending has already started. We have already disbursed around 1,000 crores from our side. We would definitely like to disburse more, but as and when we see that lockdown and the impact of this is reducing and the moratorium gets over. So I think that's my 2 cents on it. I'm happy to hear any questions.
Thank you. I should move on to Mr. Anil Goyal. He's from the AAA Insolvency. I'm happy to tell that Dr. Dadi has also joined. So I'm going to request Mr. Goyal to be taking his 5 minutes and restricting at that. And then I would like to go to Dr. Dadi. And then there are so many questions which have already come up and which we need to really address because our audience is keen to listen to our views on it. So Mr. Goyal, first you take a shot and then we'll move to Dr. Dadi.
Thank you, Dr. Charan Singh. Thanks a lot. Thank you, ASSOCHAM, for organizing this wonderful and timely webinar. And all my greetings to my co-panelists and to the participants in the webinar. See, like right from the beginning of the panel, I think Dr. Charan Singh has done a wonderful job by just explaining the importance of priority sector. And all these priority sector may it be agriculture or agricultural based industries, or it may be exports, or it may be in MSME. The most important part we all have seen is the agriculture and MSME as far as the economy is concerned. The State Bank of India, Mr. Sanjay Srivastava, has also told all the participants what kind of schemes that the State Bank of India is working on. Similarly, SIDBI has also told what kind of schemes that they're working on, and even Muthoot has also told like how they are actually trying to work on the microfinancing and also the bottom of the pyramid that they have gone on. See, presently, what I'm trying to say is the impact of the COVID is definitely there, and the how to manage, how to overcome these kind of scenarios and situations. First of all, the government has done a lot of job for MSME and for even exports and for the lenders. My presence here in this webinar is primarily to understand a professional's job. I keep getting questions from various people who are adversely impacted with the COVID-19 scenario that they probably have no information about how to go about while taking the advantage of these schemes announced by the government. So to my fellow panelists, I would say that in case they would also try to advertise their schemes to public, maybe through the social media and maybe through even the print media is not very popular these days. But of course, with the social media, in case they can popularize their schemes so that it reaches the needy people. So that's one important observation as a professional is. I would also add that being an insolvency professional, we also have seen that the government's action taken on the insolvency front, even if there is a default, maybe because of the COVID scenario, and that those defaults would not be considered as default. Any default after 25th of March 2020 would not be considered as a default for the purpose of insolvency and bankruptcy code, and no application can be filed against any of these defaulters, so-called defaulters, who are actually not a defaulter, but they are actually suffering from the COVID scenario. No application can be filed. So that's a very, very big relief that the government has announced. So first, it was the RBI that for first 6 months, this accounts would be considered as standard. It would not be considered as NPA as far as this IRAC norms are concerned, like income recognition and asset classification that we call generally prudential norms. The government has announced first 3 months, and the RBI, it's like later on the RBI changed it to 6 months, from 3 months to 6 months. See, then conversion of the interest of during this period is also converted into FITL. See, because see, there are a lot of participants here. They are the MSME industry. The government has increased the limit for MSME. For the medium industry, the limit has now been increased to investment of 20 crores in the plant and equipment, and also the turnover of 250 crores. That was announced by way of a notification by Government of India on 13th of May 2020. So this action, and this was a timely action, because whatever government is announcing, whatever the facilities are being uh, uh, provided through banks, that would be availed by a large number of MSME enterprises. Earlier, the definition was very old. It was something 13 years old definition. So when it has been increased, the turnover factor has been brought into this. So this also would extend a lot of benefit to the industry, MSME, so that they would be able to avail the benefits announced by government as a package. See, I would also like to say it is not that the everything has to be suffered by the enterprise. This COVID-19 kind of a scenario is a natural calamity. It is an act of God. All the entrepreneurs, they actually have to live with it and they have to manage it. And I actually keep telling people that not that the entire loss you have to take on yourself. Whenever there is a natural calamity, no economy or no society says that one segment of the society would become richer and the other segment of the society would become poorer. So in case we remove all the employers and we push all the employers to financial death, then where the employees will work? So my advice to all the entrepreneurs is that it is not that they have to take the entire loss on themselves, because even if the banks are extending the facilities through government schemes, but then they have to pay interest and they have to repay the loans. There is nothing which is a subsidy to you, and there is nothing which you don't have to pay. So the first and foremost is you have to negotiate with your employees, you have to negotiate with your landlords, you have to negotiate with your suppliers, you have to negotiate with your all like the periodic payments. See, maybe that there are many such expenditure where the services has not been availed completely. And once the services are not availed completely, you have all the rights. You have all the rights to say that yes, I would not be able to pay full money. Similarly, the Supreme Court has already held the no work, no payment. That's a very old scenario of business or employer and employee relationship. If there is no work, no salary. So based on this scenario, in case the all the entrepreneurs, if they convert their losses or they divide their losses into all the stakeholders into their business, that would be a right scenario rather than availing the government schemes, making themselves debt heavy, taking the responsibilities of repayment and interest, maybe not now, but later. See, even for the impact of the COVID-19 would continue for not for only 6 months or 1 year, it may continue for a little longer, because there are a lot of realizations that have been taken by the society, and there are a lot many things that we have realized that these were not needed, and we were actually spending a lot of money on these needs, on these things which now the society has realized that it was not required. So there may be a lackluster in the demand, especially for the luxury items, especially for the entertainment items. So it is not always true that all the restaurants who are closed, which are closed, they will pay everything whatever they had incurred before. So this is the primary uh, focus that I would like to say, how to overcome the situation, and even finally how to enhance growth in the industry. So no growth is possible if the entire load of COVID-19 is taken by the businessman. It has to be divided, it has to be spread across the society. With this, as Dr. Charan Singh advised me to stay little brief, I would like to hand it over back to Dr. Charan Singh for the next participant. We will be happy to take questions to Dr. Charan Singh, sir.
Mr. Goel, thank you very much for adhering to the time limits. We are happy to say Dr. Dadeech is with us. Dr. Dadeech is an agriculture economist, a very well-known agriculture economist. I'm going to request him to speak to us for 5 minutes on what he thinks about the COVID-19, the schemes announced by the government, and how it will help us revive the growth as COVID-19 lockdown is then removed. Dr. Dadeech, please.
Dr. Nitish, please unmute yourself. You are muted. Dr. Nitish. So I request please unmute yourself.
Dr. Dadich lives in Bombay, and we gave him a very short notice to join us. So under that lockdown, he's joining us he's connecting with us on his smartphone. So that is probably the little hitch that we had. You know, the webinars generally work well, not even on iPad, but on laptops. So I think that's a little hitch that we are having. And I hope he's able to listen to us and we'll be able to converse with him. Dr. Dadich? No worries. Till the organizers bring him back and he is able to listen and interact with us. I have a question for the panelists. We are left with about 20 minutes to go, and one general question which I would like to know your views on. In this scenario that we are, the COVID-19, and the world is flat. This is the first time that Bombay is closed, Calcutta is closed, London is closed, Paris is closed, New York is closed. If you remember what happened in 2008, first something happened in America, it traveled to Europe, it traveled to Asian countries. But this is the first time for 3 months, every city, every commercial place, and every commercial entity is closed. What is working basically is the government, administration, police, army, and banking space. So therefore, this is a very unique situation. That is why I asked this question. Do you think interest rates matter in the growth process, in investment, and in lifting the sentiments of everybody, the entrepreneur, the pensioner, the investor, everybody? So in brief, the question is, does the interest rate matter in the scenario? And obviously, the second question directly linked to it is, in India,
Hello.
do you think in India we have the right interest rate?
Hello.
I think Dr. Dadich has joined. Dr. Dadich, can you hear us?
Yeah.
Yeah, Dr.
Thank you.
Dadich, we are
Hello.
in the Dr. Dadich, we are in the middle of a panel discussion. We have somebody from SBI, SIDBI. As you know, we have somebody from Muthoot, and we also have somebody from AAA Insolvency. We have covered every area except agriculture because that was the slot we had provided for you. We have just finished our introductory remarks. I would request you to take 5 minutes to tell us what you think of COVID-19 and the government schemes on agriculture front, which will help us revive the economy as COVID-19 lockdown would be removed.
So far, agriculture is concerned. What I feel is that we are doing extremely well so far. Production is concerned, and credit availability is also there. And because of the Kisan credit card and other facilities and moratorium given by the banks, things are very comfortable. But the problems with the farmer is that they are not able to market their produce and cannot get the remunerative prices of that. Now, so many things, agriculture sector, almost more than 10 steps, 11 steps have been taken. Others are from the side of the availability of the credit, enhancing the funds. But 3 more important reforms they have taken is very important, which will transform the entire agriculture. The one is the removal of the Essential Commodity Act. Now, this will go a long way in transportation of the produce to the other areas, and these all commodities, and then stock limits, which will also be affected, and as a result, there may be the better prices for the farmers. Now, second aspect is the restriction reforms in the APMC, and the APMC, this freedom to sell the produce anywhere, anyone will go a long way in giving the freedom to the farmers, and this may also bring about a lot of changes in the agriculture sector for realizing the better price. Then comes the third aspect, which is also very important, that farmers should know in advance what is the price he is going to get. And though contract farming is in work for quite some time, but I feel it could not make much headway because the contract is between the two parties which are not equals. One is the company which is very powerful, and another is the person farmer who is very weak and have no the negotiation power, and as a result, it could not, contract farming could not click. But I feel if we go for a reforms in the producers organizations, and if producer organizations can be organized in a better way, and certain relaxation which they need, if it is given to them, that would be something great, and the farmers would be able to get the better prices for them. The most important is that for a producing company, there is a tax relief for 3 years, and but the limit is only for the companies having the turnover of the 100 crores annual turnover, which is on the lower side. The company is promoted by the individuals in the dairy sector. They have a more than 1 lakh members, and their turnover is on the much more than the 100 crores. The company on which I am director, it is almost say 12,000 crores is the turnover. So this concession of the interest, the concession on the tax should be according to the membership and the volume of the business. If that is done, so if the reforms in the agriculture sector, there this opportunity of the COVID and package done, this revision is taken place. Well, producers company will also perform very well, and farmers will see a transformation in the agriculture. Fine, and I'm sorry I could not because of the connectivity problems and others. So I did my homework, but unfortunately I could not join you on time. Perhaps you have heard me, no?
Yeah, Dr. Dadi, that
Hello.
was excellent presentation.
Yes, Dr. Dadi, we could hear you loud and clear.
Yeah.
I am Sanjay Srivastava from SBI.
This was an excellent presentation.
But
We thank you.
if you give me another 5 minutes, I would like to discuss with you or with this gathering of the experts and others to something about the priority sector land in itself, which is very close to my heart.
Sure.
So, as you are aware,
Dr. Dadi, what I will do.
can I continue or you may some time afterwards?
Yes, we will give you some time afterwards. We will come back to you in the second round. Now, I just want to ask the organizers, Dr. Rajesh, it's already 1:07. Can we extend the session till 1:20? because we have questions and we started little late. Can we, Dr. Rajesh, can we extend it a little bit? 5 minutes if
No.
panelists are okay. If
Yes, sir,
attendees
we
are
can.
okay,
Yes,
we can
sir,
do
we
that.
can.
Yeah.
Hello.
Okay, fine, no problem.
Yeah. So what I'm doing is I have posed this question to all the members. What do you think of the interest rates? Do they matter in such a situation? And in India, are we at the right interest rate? Along with this, on your WhatsApp, you would have seen I've sent a question to each one of you. There is a question for Mr. Lakshmi Narayan at Sidvi. On your WhatsApp, you can see, and then you can respond. And I think there are questions which you may like to, each one of you may like to take. While you are reading your questions, I'm going to then, just to save time, I'm going to ask a question directly to Mr. Anil Goyal on insolvency. Now, Mr. Goyal, as you know, in any situation, when the economy is down and under, and the corporate sector is performance is suffering, there is a reflection, obviously, on the balance sheet of commercial banks. So there is every chance that some insolvencies and some NPAs will boom up. I would like to know, in addition to the question that I've asked on interest rate, briefly, if you can say, has any estimates been done? Where would the NPAs be, say, by end March 2021?
Okay,
And I would
so
like you to be brief, but yes, like to have your response. Then I have a question for Saeed ji. Now, while he's answering, you could be thinking about it. You are working at the grassroots level. You have 1.8 million customers. And as you said, you are closely connected with NBFCs. My question to you is plain and simple. You must be seeing the migrant labor phenomena that happened in our country. Migrant labor is 1/5 of our total labor. And as a SOCHM, a trade body, I need to be running my engines. And my engines only work if the labor comes back. So my question to you is, given your grassroots experience, where would you see the return of the labor, and when do you think the labor will come back? After Diwali, before Diwali, after monsoon, and how much will it come back? Again, I would like you to be brief. So organize your thoughts while Mr. Goyal is answering us on the first question. Mr.
thank you,
Goyal.
Dr. Charan Singh. As regards the interest is concerned, presently the priority sector, especially this 3 lakhs crore, which is being allocated to priority sector, the entrepreneurs will be paying 9.25% if the loan is coming through a bank, and they would be paying approximately 14% if the loan is coming through an NBFC or NBFCs. Now, according to my understanding, with the kind of competition that the India is facing from global entrepreneurs, the interest rate for MSME at 9.25 or 14% is on the higher side. The, uh, the, the transparency in the pricing over the last 10, 15 years because of the online purchasing, online shopping, that has actually been very, very high. So the prices from the customer that we are getting as an entrepreneur, most of the entrepreneurs are not that which is very high as compared to the past. So what I'm trying to say is that the profit margins have reduced. So the bank interest rate at 9.25%, and that too as a priority sector lending rate, that is on the higher side. And in case a person is not having that beautiful balance sheet, so he goes to an NBFC, and the NBFC will charge 14% interest rate. That's what is the MSME interest rate, and that's on the higher side. Coming back and being brief, as you said, the NPAs as on 31st March 2021 is going to be reduced, because the number one scenario that maybe that presently the IRAC norms are suspended for 6 months, and in case the COVID situation continues, then there is an expectation that it might even be extended further. So the new NPAs would not be much during this period, as the banks may not even declare the new NPAs, because that may be considered as pertaining to COVID-19 situation. Now, coming to these NPAs which are prior to 25th of March 2020, which the ordinance which came yesterday, and the government of the government of India has given an ordinance that the insolvency law would be applicable to all the defaults uh, before 25th of March 2020. So whatever NPAs are existing NPAs, there is no bar, there is no suspension for recovery by the banks or by the financial institutions or by NBFCs. The banks and NBFCs have got now three options. One option is the insolvency and bankruptcy law, which actually would provide a resolution, and then in case resolution is not possible, it can go for liquidation and the recovery can be made. Second option is the SARFAESI law. SARFAESI law also has been completely settled now, like the insolvency law. A lot of hurdles that we faced in the last more than 3 years, that has all been ironed out with the active with the very active actions by IBBI, by Ministry of Corporate Affairs, Government of most of the issues under the insolvency law has been settled, and now the litigation would be reduced to a great extent. Similarly, in SARFAESI, there has been a lot of Supreme Court cases in the last 1 year, and the SARFAESI law is also completely settled now. And whatever hurdles were there, those all have been removed. So we will see that the lot of litigation, most reduction in the litigation also under SARFAESI Act. The third is the RBI circular dated 7th June 2019. Under that circular, the banks can go for restructuring scheme, and also the fourth, which the banks might even devise based on the RBI guidelines, that would be internal restructuring of each bank. So with these four schemes, the banks definitely would go towards the realization of their security interest. They would realize and they would crystallize their losses. They would crystallize their losses during the next 1.5 year. The only difficulty that I'm trying to see and perceive is the lack of market for the stressed assets, the lack of market for the new investors. So the government has to open up. Government has to open up funding for any new entrepreneur who would be interested in buying any stressed assets, and that funding should be quickly available because the IBC timeline is also very strict, and SARFAESI timelines are also very strict. If a person would like to do business by just acquiring any stressed asset, presently the option of taking loan after he is winning the bid is a very remote, because the timelines of taking a loan and the timelines for making payment is not matching. So that has to match, and the government and the banks in India should come up with these schemes so that the stressed assets are sold in the market and the new entrepreneurs are created. Thank you, sir.
Thank you.
Charan Singh.
Now, Mr. Sayyed.
Yeah, thank you, sir. I think very interesting question that you have posed. I think migrants going back.
I'm going to come to Mr. Sanjay Srivastava immediately after Sayyed, and then to Mr. Lakshmi Narayan. So you should prepare your response to the WhatsApp questions that have come. And I'm going to request you to be brief. We are already at 1:16. And then I want to give some time to the agriculture economist, renowned Dr. C.L. Dadij. So after Sayyed, I'm going to go to Mr. Srivastava and then to Mr. Narayan, and Dr. Dadij will have the last word before we close. Yes, Mr. Sayyed, please continue.
Okay, fine.
Yeah,
thank you.
Very much. Oh, thank you very much, sir. I think it's a very important question, and I think migrants who are working in various urban setups in our MSME are the backbone of our industry. So I think this is a very relevant and a pertinent question. I think this has to be looked at from the perspective of what is the reason behind these migrants going back. I think there are two reasons. And we had a practical kind of experience back in Kerala. A lot of migrants come from Assam, Bihar, Odisha, and West Bengal and work there. When we saw them kind of panicking and trying to go back, we, as a CSR initiative and as a responsible kind of an entrepreneur there, we organized all sorts of facilities. But we also interacted with them, and we told them that you have all the facilities that the government is providing. They're providing food, accommodation. Why do you want to go back? The questions, the feedback that we heard from them is that they have apprehensions. They want to go back close to their family, that if anything happens to them, somebody is there to take care of them. So that was the number one reason for people running back. The second reason was also, sir, as I think we have mentioned, we had a crop which was ready for harvest. So typically, most of the people who are working in urban areas during this harvesting season go back to their villages and to their hometowns and help their family to harvest this crop and market this crop. So this urban migration in this season is not an unknown phenomena. That does happen. The COVID situation accentuated it, and definitely a lot of the people went back. So these are the two primary reasons. I think the question of when will these people come back, I think is something that it needs to be interpreted. But in my opinion, uh, uh, post the sowing season, most of the people will look for alternative to earn money. Obviously, there is a kind of a lot of labor that would be available in the rural areas, so there will be a lot of competition. So getting earnings to their liking would be difficult. So they would need some sort of an employment opportunity, and they will come back. But that depends on simultaneous opening of the transporting system. Right now, we have only airlines which are operating, trains, special trains which are operating, but all trains are not operating, and road transport is also limited. If once this opens up and this really integrates the economy the way it was integrated earlier, I think people would like to come back and work in productive sectors that they have been working. The second most impact, and which the government is doing, is creating a perception that this disease is not to be scared of. We have to collectively fight this disease, and the perception of what is the real fatality of the disease. So government has done good initiative in identifying that people who are of our older age and people who have all any frailty or any other disease, existing disease, are more susceptible. But people who are healthy and in the age which is less than 40 or up to 40 are reasonably okay and safe to go out and work. So I think as the economy opens up, we would see more and more people coming back. It'll be difficult to kind of put a date or time to it, but I think September, October, November, these are the peak season for the industry. The production for these seasons starts basically now. So I think as soon as the transportation system opens, I think a lot of people will come back. We are already hearing anecdotal stories where people are willing to buy air tickets to transport the migrant laborers. So I think more of this we will see, and these are critical kind of cornerstones of our economy. They should be back very soon.
Thank you so much. We're just running out of time. So I would now like to move on to Mr. Sanjay, requesting you to be brief, and then we'll go to Mr. Lakshmi Narayan and close with Dr. Datta. Yes, Sanjay, please.
Yes, Dr. Chair. Very relevant question which you raised. How important is rate of interest? So I'll start from the case which is going on in Supreme Court. I'll speak within my limits because the matter is sub judice. The only thing which I will say, as a bank, what do? We take deposit, give loans out of it, and get our margin somewhere in between. So I have a liability to pay my deposit customers also. So that needs to be kept in mind. Now I'll come to the pricing part. Anil was talking about this GECL being priced at 9.25%. That's the upper limit which government has set for the banks. So in State Bank of India, we have decided to link it to EBLR, and we have decided to price it at 75 bips over EBLR. So my EBLR from 1st of July would be 740. So I would be charging 8.25 from my borrowers. Although I can charge 9.25 also, I'll be charging 8.25 only. The other thing through this platform, which I want to tell all my listeners also and my panelist colleagues also, in State Bank of India, we have understood one thing. Like, these are not normal times. So if I look at the normal cash cycle of my borrowers, that is not done. So we have issued very clear instructions that all limits will be reassessed with a longer cash cycles in view. And this reassessment will be doing very quickly. As a one-time measure, what we have done, normally there are time limits for using a particular audited balance sheet. This year, since MCA has permitted companies to submit their balance sheets by November, So for this year, we have decided that we'll work with the audited balance sheet of 2019 till the month of December. That should help my borrowers in a big way. The other thing which we have done, we have understood that with sales not happening, people will having their stocks not moving. We understand that the receivables would be going up. So we have permitted and we have delegated this to very lower level of officials in our banking hierarchy. So if there is a borrower with a limit of 10 crores and he finds that his DP as per the current way of calculation doesn't come to 10 crore, we have permitted them to take longer receivable cover period, longer holding periods, and arrive at the DP so that he can utilize his funds. And when we do this, we have permitted free interchange between fund-based and non-fund-based. So we have simplified our systems, made them more lax for this year per se. We hope it should help. And as Sadaf was speaking, I remember watching a news item yesterday where Punjab wants all the laborers back, and they are requesting for a train to bring the laborers back to Punjab. So one, that is, yes, that would be happening. Two, Mumbai, as we see, even otherwise, this is the time when we have the sowing season, when people go back to their villages to work in the fields, and they do come back somewhere around Diwali. So I am very positive that should be happening this time also. One last bit on MSME. Charan sir, just give me maybe a minute on it. So when this scheme of three,
we are getting out.
Just 30 seconds. When this scheme was announced with the 3 lakh crore of guarantee from the government for collateral free loans, where we were to give 20%, we had a different definition of MSME. So the upper limit was pegged at 25 crores and turnover of 100 crores. Now with the new definition of MSME, which has been gazetted, maybe associations like SOCIAM need to take it up with the government to increase that cap also. I'll rest my point there, and if there are any questions from audience, would be very
Thank you. Mr. Lakshmi Narayan, requesting you to be brief, please.
Most of them have asked whether banks would be willing to assist the new entrepreneurs setting up new projects now. I think currently it will be very tough call because the demand side has not picked up as so supply. Although there is supply side measures have been announced by the government, the demand side has not picked up yet. So it will be very tough to analyze and assist the new greenfield enterprises currently. I think it will take some more time even for the entrepreneur to think about setting up a new project. I think mostly that answers most of the questions.
Okay. Thank you very much. Dr. Dadi, we have about 3-4 minutes. It's already 1:25.
Okay, fine.
Can we request you to give a summary of your thoughts, please?
Right. Okay, fine. Only the one point which I want to mention is that so far agriculture marketing is concerned, though freedom is given to the farmer to sell anywhere, but because of the COVID situation and the lockdown here and there, farmers could not take their produce to the markets. And so I feel the arrangement should be made by the government to procure their produce at the village level. And this, if this is done, farmers' income will increase and the repayment will also increase, because at the farm level itself they will get the produce. This is a difficult task, but I have observed that during the early 70s, when the government could procure the levy sugar at the village level. So now why not the market surplus should be procured at the village level, and the best is that producers company can do this job. My another suggestion for the agriculture is, we have a scheme of the RIDF. This scheme is a win-win situation for everyone, the banks, the government, and the NABARD. Now this money has gone up in a sizable amount, and almost 35% of the NABARD's resources. More of the money is going as a finance, I feel if there is a separate organization or subsidiary of the NABARD as a rural infrastructure development corporation, which should address the techno-economic or techno-financial aspect of these rural infrastructure projects, this will add to the rural economy. So this should be done. And the other aspect my friends have already covered so far. The collateral-free advances to a MSME is concerned. I personally feel that it's good that we have the collateral-free because it is a time when we should go for. But they can think of the social collateral, so the bank's interest is safeguarded. With this, I will close my
Sure.
presentation.
I want to
Thank you very much.
I want to thank each of the panelists to have spared this time to speak to the SHM and the members of the SHM. As you have seen, excellent thoughts have come about, excellent ideas have come, and we know that the panelists were chosen very carefully. Agriculture sector is one which is helping us. The agriculture sector has done well. Rabi and Kharif has been good. They have been helping us. And now we have 3 suggestions from the expert here. The MSME sector is providing tremendous job and support. And we understand the labor will come back. Government is doing everything that it can do to ensure that the agriculture, the MSME, and then the banking sector works well, so that when COVID-19 lockdown is relaxed or removed, the economy booms back into the growth phase. Very happy that each of the members have made excellent contributions. I want to thank each of the members. Some of them have been working at the overall level and others at the grassroots, and everything that you do in the country, the way it all pans out, if ever there's a crisis, then the insolvency and those areas become very important. And we have an expert from there who spoke to us even on that area. With this note, I would like to conclude and once again thank everybody for attending this panel discussion, and the audience that I see still there sticking on even beyond the time that we had said. I want to thank the audience too, and finally thank SHM for thinking, organizing, and delivering such a very good panel discussion. Thank you, one and all.
Thank you, sir.
Thank you
Thank
very
you.
much. Thank you very much,
Thank
Dr.
you.
Charan Singh. Thank you, Sanjay ji. Thank you, Mr. Narayanan. Thank you, Sudha. And thank you, Mr. Dadij.
Thank you. Nice of you.
Thank you.
Though I
Thank you.
could not do my justice with my job, but fine. Okay.
You have done wonderful, sir.
No. Thank you.
sir. We can switch log off now, na?
Yeah.